Hello, everyone, and welcome to today's Gold and Silver Club end of week review for the 9th of May 2014, presented by myself, Phil Carr, and Nick Kalsi at the Gold and Silver Club. Today, we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for the commodities. We'll be looking at gold, silver, oil, natural gas, coffee. We'll look at the top trade of the week. We'll be covering live market commentary and technical analysis. We'll look at the week ahead, so the key events looking forward, the 6 major announcements that will affect the commodities markets. And, of course, we'll be answering any questions you may have today too. So gold price over this week. The main headline news really has been gold prices remain steady on Ukraine tension and Asian demand. Gold prices were trading steady on Friday, driven by the physical demand in Asia and the ongoing geopolitical tensions in Ukraine. Overnight, gold prices were up $7 to trade at $1,291 an ounce from an earlier daily low of $1,284 an ounce. Gold prices, they tended to benefit from the US dollar index yesterday, which hit a multi-month low. We'll look at that very shortly on the technicals during the US trading session, but then made a strong rebound to trade higher on the day. Several economic reports influenced the US dollar and commodity prices to present traders with highly lucrative trading opportunities throughout this week. The US Department of Labor reported the number of individuals filing for unemployment insurance declined to 319,000 in the week ending May the 3rd, which was supportive for the US dollar. So whilst on the flip side, gold rebounded on fresh reports surrounding the ongoing geopolitical tensions in Ukraine, gold has experienced safe haven buying in recent weeks amid the heightened Russia-Ukraine conflict. So on Thursday, pro-Moscow separatists in eastern Ukraine ignored a public call by the Russian President Vladimir Putin to postpone a referendum on self-rule, declaring they would go ahead on Sunday with a vote that could lead to war. So as the tensions between Russia and Ukraine continue, we remain bullish on the underlying factors for gold prices in the short to mid-term. We'll also take a look at other markets affected by the Ukraine and Russia conflict, such as corn, wheat as well at the moment, which are very close to their 2014 highs, Ukraine being a major exporter of those commodities. So we'll take a look at those very shortly. There's lots to look at on the technicals. The energies are looking very interesting today as well. So before we do so, I'm Phil Carr, professional trader, trainer and speaker. I am the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas, commodities. I've trained thousands of individuals. Can't speak today. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies. They've had a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications, speaking at numerous trading seminars, webinars and workshops. So joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, the mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial TV. That's a bit of background on the Gold and Silver Club. We'll take a look at the gold price. We'll just move over to that and see where we are trading at this morning. We're currently trading at $1,289 an ounce. So we're at quite an interesting level on gold right now. We'll take a look at the technicals very shortly. The top trade of the week using the Gold and Silver Club signature trading strategies has in fact been a lovely trade that we put on Thursday on natural gas. This was helped by the natural gas storage inventories. We had a really nice sell-off, and this delivered over 190 points actually. Each lot traded over 1,900 US dollars. For a 65-point risk on that, $650 US risk for a 3-to-1 on a natural gas sell short. Okay, so what we'll do now, we will move over to the technicals and we'll take a look at the charts and what is lining up this morning. So let me just move over my charts for you and we will cover those and we shall take a look. We'll start off with the some of the energies, and we'll take a look at coffee as well. The first market we'll start off with, we just have a look at coffee at the moment, because coffee is looking quite interesting right now. Coffee we've had some nice sell short opportunities on coffee this week. Actually, you can see where we've ended. We're still in a sell short on coffee at the moment. What you'll notice here on the daily, we are just starting to break below the 50-day moving average here, which is quite significant for coffee. Coffee's in fact been above the 50-day moving average since we've got the big breakout towards the end of January. So coffee has been one of the best performing commodities of 2014, was very much helped by the floods in Brazil in December and the ensuing drought in January, which caused big spikes. Over 30% of crops were damaged in Brazil. We saw big spikes in the price of coffee over the course of February and March. And at the moment, we're starting to get a little bit of a pullback. Now that we're breaking below the 50-day moving average, we might start to see this ramp up in terms of a sell short here. So we're looking a little bit bearish on coffee. We are maintaining short positions on this at the moment. You can see where we came up to some major Fibonacci levels this week. We found resistance there and we started to sell off. And we're currently up about 1-to-1 on that trade, but we're looking for coffee just to continue the momentum for a sell short at the moment. As we go over to other markets which are selling off a little bit, actually the natural gas market is sitting right at the 50-day moving average as well. Very similar actually set up to coffee right now. We've been working our way around this resistance level, been bouncing around the 4.739 level on natural gas storage inventories, which came out Thursday. This helped us with our sell short. We broke through the Fibonacci level. We came down. We're currently finding a little bit of support around the 50-day moving average. We can see above that all the MAs are turning bearish, and we are looking to just maintain a sell short at the moment. If you take a look at the weekly, we've also broken through last week's low and the previous week's low, and it doesn't really seem to be much support on the natural gas market now until we get down to around the 4.431 level. So natural gas, we are remaining short on that for the time being. I would like to take you across at the moment to, we'll take a look right now at Brent Crude Oil. Now, Brent Crude Oil, just take a quick look at the 1 hour. We can see starting to get a little bit of a sell-off here on the 1 hour. We had a nice spike this morning. We can see you got two inverse hammers. The market's starting to break down. I mean, this is happening right now. 1 hour time frame. Put it on the 4 hour, 200-day moving average. Market is finding resistance right at that level currently. So it looks like we may get a bit of a pullback from here. We had a nice spike up yesterday and overnight from some earlier setups. We got a nice breakout above these Fibonacci levels. But at the moment, looks like there's some profit taking. Let's drop it down to a tighter time frame. We can see starting to sell off here. We'll look at the 4 hour to see if we will find resistance around the 200 MA. And we'll see whether the market just begins to sell off here, get a bit of a pullback on Brent Crude Oil. Daily here, this is the surge that we got to the upside just earlier on today, but we are finding some resistance. You can also put a horizontal resistance here, which is just around the 109 level. You can see the market just spiked up to that level, and yeah, it's just starting to sell off. This is a real-time trade now, actually, which is starting to come down. So that's looking quite interesting. I would take note of that on the Brent Crude Oil market. For at the moment, we can just draw in a little trend line here on Brent and see whether we will follow through on that today. Just a small trend line starting to develop here. That's what I'd be looking at for potential. So we could probably move it up this region and see whether we get a move back down to the trend channel, which is starting to develop on Brent Crude Oil. Brent Crude Oil does love to follow trend channels. We've only got about 2 bounces on the resistance side, but the support side, we've got a few bounces here. So we may see a move just back down here in the short term, which would give us around about, let's just check that out. Yeah, a move of around about circa 60 points there. So we'll see if that just sells off just over the course of this morning, just prior to the US session. Also, if we take a look at, we'll also move over, that's Brent. We'll have a look at WTI this morning as well. WTI did get quite a nice surge this morning. Does seem to be same as Brent, got a nice surge overnight and this morning. Get a little bit of profit taking at the moment. Came up to key Fibonacci level around the 101 level here. And we can see as well, we're starting to get some profit taking around that Fibonacci level. And that has been a profit target, obviously, for a lot of traders here as well. So I would take a look at the energies. Natural gas still selling off this morning, so we might get a bit of a sell-off, which correlates through with WTI and Brent. Now, if we move over, let's take a look at the US dollar index this morning as well. So the US dollar index, we did break through 2014 lows here yesterday. We came down, broke through the 79 level, quite a key level, but we can see here actually we're just looking at the weekly at the moment. We did get a capitulation when we came down to that level. So that means a lot of traders decided to get in and buy at that very key level. We just put it on the daily here. You can see we came down to 78.92. Huge amount of buying. We got a huge surge at that level. You can see here we've got roughly about a 57-point move to the upside. Quite a big surge compared to previous days. We look to be gaining a bit of strength here even today as well on the US dollar index. It's been a pretty nice move overnight. On the 4-hour, we're continuing just to move to the upside as well. So in terms of gold, so if that continues to go, if we continue to get a positive move to the upside with the US dollar index being some, in terms of the inverse correlation there, we would expect gold to then sell off. So if we continue to get a strong move up on the US dollar index, we then expect the gold market to sell off. So on the daily at the moment, gold looking very muted. Didn't move much yesterday at all. Still finding some support around the 12.76 level. We can see really tight time frame, really small muted move yesterday. On the daily, we only got about 100-point volatility. Your average daily volatility on gold is 200 points plus. So that was half what the normal volatility is. If we break it down and just put it on a sharper time frame, really I'm looking for a breakout in either direction here. So you've got to move up to 1,295, support at 1,284. I'm not really too interested in the price as it stays just range bound between these levels. If it just continues to range bound, for me, it's not very exciting. There's not a lot of points on offer there. However, if we get a break out of this consolidation at the moment, I think then we could really start to pick up some momentum here. So if we can get a break above 12.95, we could get a move, shoot up to 13.06. If we get a break below 12.84, we could shoot down to 12.76. That's what I'd be looking for at the moment. But whilst we stay range bound, not too interesting. But we keep an eye on those levels on gold today. If we move over to the copper market, copper has been quite interesting. You can just put a very clear, I'll put it on the daily here. You can just see a very clear trend channel, which copper is continuing to maintain, actually doing very nicely on that. Even had a retrace to that this week on Wednesday. Another bounce of that trend line. Very simple. Just draw that on from the 18th of March, just draw it on the recent support levels. And you can see we're just continuing to find a upward trending channel here on the copper market. And every time it's come down and retested that level, it's offered a buy opportunity. And we just need to get a pop above 3.08 here again to get a move back to resistance, which will be 3.156. So that's what I'd like to see in the short term. If we get a move like so and just pop up, back up to resistance at 3.192 and back up to 3.1517, just above here on the copper market. Now, if we take a look and we move over to some of the softs at the moment, the other ones to watch, I would say, at the moment, certainly over the weekend are going to be corn and also wheat as well. So we've actually got quite a nice, we've had a nice consolidation here on the wheat market, right at a key level of resistance. We did break out earlier on this week. We produced new highs just around the 742 level here. We're getting a consolidation, a little bit similar to gold at the moment. You can see this is the area of consolidation with the price right now. So we're just moving just between support, which is circa 720, up to resistance, which is about 745. So we're just continuing to consolidate between these levels. So these are the levels of consolidation at the moment. And what I'll be looking for is a breakout either above here 744 or the breakdown below 720.97. So whilst we stay within that range, we're just waiting really for the next big move here. We're awaiting a break in either direction. So we're looking for a move here, a break above 744, spike up to 774 is the next major level, or get a break below 720 and we'll come down to circa around 700 there. So that's what we're looking at in terms of a breakout of that consolidation. Before I go on to corn, we'll just go quickly back to, there's the move that I just discussed with you on Brent Crude Oil. I mean, it's pretty quick. It's already selling off. It's come down, reached about 16 points or so. So you see we're just selling off this morning. Nice hammer also forming on the daily there as well. So it's quite a nice little move that we're getting there. I expect that to come down, hit these Fibonacci levels and come down to the lower trend line for the short term here on Brent. So as we move over, we'll just take a look at the corn market as well. So on corn here, we also have a similar setup to wheat at the moment. We're just getting consolidation around the 2014 highs I'd like to see really a solid break above 518.50. If things do escalate with the tension, the conflict in Ukraine and Russia over the weekend, we may see gapping on the open on Sunday night, stroke Monday. So I'll be watching out for that. And it looks to be there's a very strong upward trend in both corn and wheat this year, continuing to break out to 2014 highs here, very close to the 2014 highs as well. So I'll be looking for potential opportunity to just ride the overall trend here and get in on another breakout above 518.50. So some really nice moves are potentially ahead on the softs next week. So just in summary here, at the moment, you can see coffee continuing to break down, just close below the 50 MA. So we're staying short for the time being on the coffee market. Natural gas also looking bearish today. We're also seeing a similar pullback on Brent just this morning. We're looking at WTI. We're looking at wheat and corn for breakouts from their consolidation right now. So we'll see if we're going to get that sort of a move today or if we're going to get that early next week. Crude oil, commercial firms have in their inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish for crude oil. We see that play out nearly every week. That's very strong correlation. Next Thursday, 15th of May, we also have the Philadelphia Fed Manufacturing Index that will have a big impact on the US dollar index and also gold and silver. That's at 3 p.m. GMT, 10 a.m. Eastern Time. The Philadelphia Fed Manufacturing Index rates the relative level of general business conditions in Philadelphia. A level above zero on the index indicates improving conditions, below indicates worsening conditions. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish for the US dollar. Then next Thursday, 15th of May, at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US natural gas storage. So very similar to oil storage inventories. That Energy Information Administration, the EIA, give the natural gas storage report, which measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So whilst it is a US indicator, it does tend to have a greater impact on the CAD due to Canada's sizable energy sector. It's also important because the CAD is correlated to oil price. And next Friday, 16th of May at 2:55 p.m. GMT, 9:55 Eastern Time, we have the Michigan Consumer Sentiment. Next step here. So if you'd like to really find out more about the upcoming Gold and Silver Club live trading room sessions that we have running every single week, you can also find out more about the upcoming Gold and Silver Club master class workshops, which are being held over May and June. You can very simply, if you've got any questions at all regarding the markets or regarding the analysis we've done this morning, do get in touch. Just fire us over an email at office@thegoldensilverclub.com. Depending on which country you're in at the moment, you can call us either on our London, New York, Johannesburg, or our Budapest office. Numbers on the screen there, or you can just very simply request information on our coaching program. Just go to www.jointhegoldensilverclub.com. That's the best way for you to get in touch then. Just office@thegoldensilverclub.com if you'd like any more questions just regarding the analysis that we've done this morning. Okay, and of course, if you'd like to subscribe to our newsletter, you will receive weekly energies, agriculture, and also precious metal news. Do make sure you take advantage of that. Just go to the Gold and Silver Club, receive the free weekly newsletter, and you'll get all of that analysis on a weekly basis. So do make sure you take advantage of that. Okay, perfect. Right, so I'll leave the details on the screen for a couple of additional questions that we've got there. And guys, I wish you luck for today's trading and into next week as well. Have a great weekend. Thanks to FX Street and the team for putting on today's session. And we'll see you back here same time next week. Okay, so good trading, guys. Have a great weekend, and we'll see you on the next one. Okay, cheers, everyone. Bye-bye.